Well, hello everybody and welcome to Real Wealth Network's weekly webinar. This is Ben Smith. I'm the Director of Investment Counselors and Investor Relations. How you doing today? It is Thursday, August 30th, 2018, and we're here to talk Kansas City, Missouri today. We do this every week. For those of you who may not be familiar, every Thursday at noon Pacific, 3 p.m. Eastern, we do one of these webinars, and typically we talk to one of our affiliates in one of our markets, although we pepper in the occasional special webinar with talking about taxes or for new investors or whatever. But most of the time it's a particular market that we focus on. Today is no different, being Kansas City, Missouri. So glad you could be with us. The affiliate that we're about to hear from, we actually used to and still do work with in Dallas, and they've advanced or expanded their empire and actually have been in Kansas City for some time, but we wanted to kind of see how that went. So they're now in Kansas City. So those of you who may have bought properties in Dallas may know the guy you're about to hear from. But anyway, here's our lovely disclaimer. The strategies mentioned may not be appropriate for everybody. Other options not mentioned may be more suitable for your specific circumstance. Consult your personal accountants, tax advisor, and/or attorney to discuss your specific situation. Past performance never a guarantee of future results. Real estate purchases are subject to investment risks, including the possible loss of amounts invested. While every effort is made to maintain accurate and current information, possibility of errors and/or updates always exists. We always just say, do your due diligence. Trust what we say, but verify it. Call around, talk to people in the market, ask people what they think about that particular property manager. Just do your own due diligence. Alrighty, so today what we're going to do is we're going to talk to Kansas City, or Kansas City is mainly going to talk about their market, why they're there, what they like about it, and everything else. So without further ado, I'm going to turn it over to you, and there we go, about the presenter. Go ahead and talk about yourself.
Thanks, Ben. Yes, I'm the managing partner of our company. I host a podcast called The Real Estate Cowboys. Started flipping homes with my family over a decade ago. That's how I got my start in real estate investing, and it's obviously transformed into becoming a turnkey provider and doing a developer and many other things. And our company has experience producing single-family rental properties in 6 major U.S. cities. About us, really quickly, we had 245 sales in 2017. That translated into 36 million plus in gross sales. We've been featured on Fox Business News before with one of the guys, one of the original Sharks, Kevin Harrington, had a show there on Fox Business News. We're a REIT premier provider. We still produce homes not only for investors just like yourselves, but we also produce properties for many of the institutional buyers around the country. And that has translated into over 7,000 single family homes sold. I know that that's hard to believe, but I do have a partner who is in his 70s now, who's been doing this for a lot longer than I have. So our combined experience has translated into over 7,000 single family homes bought, renovated, and sold. So we're very, very proud of that. Globally recognized educators and public speakers. We've been all over the world. We've been in South Africa. We've been in Australia. We're going to be in London here in October, Beijing in December. So I'm constantly traveling the world talking about the investment opportunities that we have in America. Full service real estate partner. We do everything. We're fully turnkey. We do the acquisitions. We do the rehabs, in-house construction management team. We also manage the properties. We have an in-house property management solution. We do not outsource our management. We make sure that we are taking care of you from beginning to end. So basically you're going to have a relationship with us until you ever decide to sell the property, if you ever do. We're also an award-winning provider. We've won many awards. The one that I'm most proud of, if you're familiar with Think Realty, like Kathy has been on the cover of that magazine before, as have I. We were named the 2016 Turnkey Provider of the Year by Think Realty, so very proud of that. Here we go, 2016 Turnkey Provider of the Year. Our executive team has more than 1,000 satisfied investors worldwide. Our company provides an integrated approach to real estate investment. We're offering overseas and domestic investors a comprehensive platform to purchase Class A single family properties. We do Class A and what I would call, with our Kansas City market and some other markets that we're in, we'll do a low B property to an A, I would almost call it an A plus property. We identify the most stable single-family investment markets by population growth, business and economic growth, age of available assets, economic cost of living, median household income, comps, strength of eventual exit strategy, school districts, and crime rates. We take all of that into consideration when analyzing markets and investment properties to present to our investors. We offer a full array of turnkey services from acquisition and financing to property management and maintenance. Our Class A and B properties provide net yields of 5% to 15%. And so 5% would obviously be for like the A plus class properties that we're doing in our Dallas market, like Ben mentioned, and then 15% on some of maybe what I would consider a lower B property in markets like we're going to talk about today, Kansas City being one of them. So why Kansas City? It's the largest city in Missouri, so that's a good sign. 6 Kansas City area companies are on the Forbes list of best large employers. The city recently added 9,900 new jobs. That's a 1.63% increase, bringing its job total to 618,000, just over 618,000. And another reason why I love Kansas City and Missouri in general is the property tax rate. It's quite low. It's only about 1 to 1.5% of tax assessed value. And when comparing that to another market that I personally invest in and offer investment opportunities to our clients, Dallas, Texas has a higher property tax rate where it's more of like 2.5, maybe even up to 3% of tax assessed value. And we obviously know that that can cut into your cash flow. So Kansas City and Missouri specifically really like that market because of one of the main reasons, the low property tax. The year-over-year appreciation rate, this is pretty shocking. I mean, Kansas City, I used to live in Kansas City. Our company used to be headquartered in Kansas City. And the appreciation that I've just personally seen from the time that I lived there back in 2014 to where it is today, 8.6 sounds like right on the dot. And that is a pretty solid appreciation rate for a Midwest market like Kansas City. Normally, you're used to seeing high appreciation, obviously, out in California, where most of our webinar attendees are probably from. And also we've seen a lot of appreciation in Dallas, but Kansas City shockingly has had a pretty solid appreciation rate as well. 8.6% is very good. The median household income is slightly above the US average, which is a good sign, at just over $63,000 per year. Unemployment rate is below the US average, which that's another good indicator of a solid market. Median home price is $191,000. or almost $192,000. The US average at this point is $240,000. So you're talking about affordable real estate in Kansas City along with low property taxes. That usually translates into some solid cash flowing property opportunities. The average rent for 2017 was almost $1,100. And that has gone up from when I was there in 2014. I know that it was below $1,000 at that point. It was closer to $900. So rents have also been increasing, and the major industries are agribusiness and the federal government. Where we invest, since I'm focused more so on, like I said, the B to A class properties, you'll see on these red dots here that we're mostly focusing on the suburbs outside of the inner city. In my experience, I'm actually from Detroit, Michigan. I've invested in 6 different major metros. Myself, I own property in 6 different major metros. Our company and my partners have invested in 12 different major metros across America. And we have found that, we really like to target these suburban areas that surround the major city because that is where we tend to find better appreciation, good tenants with better paying jobs, so on and so forth. That then translates into a more passive model for all of us involved, not just the investor who we want to provide a passive experience to, but I also want the day-to-day management of properties on my team to be passive as well. And we have found that these are the best areas in Kansas City to achieve not only good cash flow, but also a passive experience, which I believe is very important. So you'll see Grandview, Raytown, Independence, Lake Lotawana, just kind of outside of where Lee's Summit is. We also do some investments in Lee's Summit. They're more so what I would call an A-class investment, but mainly focused, on that southern, southeast area of Kansas City is where we've had very, very good success. How we invest, how's our process? In-house acquisitions team of local agents and brokers acquire ideal investment opportunities in our markets. All properties are reviewed by our in-house acquisitions management team to ensure a successful investment for our clients. Properties are renovated to our professional standards by our in-house construction management team. Bids are approved by our construction managers and acquisitions manager. Big fixed items, like the most important things that are involved with the house, right? Roofs, HVACs, foundation, driveways. These must be in working condition and must have at least 10 years left of useful life on them, or they are replaced. That is how we're able to ensure to our investors that we're truly providing a passive investment property to you. We do not want you to have to deal with big fixed items like roofs and driveways and foundations and HVACs early on in ownership. Those capital expenditures should, of course, they're going to pop up, but we want those to be years down the road. We want you to start generating positive passive income on these properties right away without the big fix problems popping up early on in ownership. We want to avoid that. The properties are all managed by our in-house property management solution as well. So like I said earlier, everything is kept in-house to ensure a truly passive experience. Here's some major employers: Google Fiber, which was actually started in Kansas City. Virgin Mobile has relocated their headquarters to Kansas City. Seaboard Corporation, Cerner, which is the largest employer in Kansas City. We're going to get into some big things about Cerner and a major reason why we're investing in the Kansas City market. Healthcare is very big there. Sprint, obviously, very large corporation. Ford. So there's some solid major employers in the city of Kansas City. Going back to Google Fiber, like I said, Kansas City was the first city in America to offer Google Fiber because of the central location. It really is smack dab in the middle of the US. And like I said, Virgin Mobile selected Kansas City for its new headquarters in 2016. So we're seeing some tech growth, and the Kansas City job market has grown by almost 18% in tech jobs since 2015. So that's a great sign. Tourism. Just over 25 million visitors each year. I will tell you, every time I need to fly up to Kansas City to look at our investment opportunities, check on our team, make sure things are going well. I lived there for a short period of time. I love Kansas City. There's a lot of great tourism attractions there, the Plaza, the Power and Light District downtown, and there's a lot of new great things going on in Kansas City. Very clean city. I really do love it. It's a great city. Visitor spending grew by 8.9% since 2014. It's been growing for 7 years straight, and tourism has generated $5.5 billion in economic impact for that region. So a lot of great signs. There's a lot of people touring, visiting Kansas City. So good stuff there on the horizon for tourism.
And do you pretty much only do the Missouri side? Like there's Kansas City, Kansas as well. By the map, it shows that you're really only on the Missouri side.
Yeah, that's a good question, Ben. I do retail deals on the Kansas City side. Mm-hmm. There's not as much affordable real estate on the Kansas City, Kansas side. Right. So it doesn't make as much sense for what we're looking for in the Real Wealth Network family. Right. So yeah, and also my brokerage is only set up in Missouri at this time, not in Kansas. It's something that we're looking to expand to at least offer property management to people on the Kansas City, Kansas side. But I don't really see us, being able to do too many turnkey, cash flowing opportunities on that Kansas side of. It's
just X percentage more expensive overall, which erases cash flow, which makes it not feasible.
Exactly. So major developments, MAC Properties plans a $78 million project to revive the Truston Armour intersection in Kansas City. That's just another area of downtown Kansas City, just outside of the downtown area, that's going through a major revitalization, major gentrification. And this calls for 5 new buildings, 450 apartments, and 28,000 square feet of retail. Construction will begin in April of next year, according to their schedule. The North Point development plans a $105 million project to redevelop Creekmore Golf Course and 148-acre industrial space in Belton. And if you look back on the slide that we had of our areas that we're looking to invest in Kansas City, Belton is a southern suburb of Kansas City. It's about a half hour outside of Kansas City, but you see these major developments that are going on in Belton. And if you drive through Belton, you see like new restaurants, new Walmarts, new grocery stores, just a bunch of new stuff being put in, which shows me that a lot of that migration and development is moving south. So that's why we've also kind of targeted that Belton area, which in my opinion would be a high B to almost A-class type of opportunity. But major developments going on there. And you see here, this development will create 1,400 new jobs, and construction is set to begin late this year. And then the big popular thing about Kansas City is the Cerner Campus, a $4.5 billion development in South Kansas City, very close to the areas where we are producing properties. It's creating 16,000 jobs between 2017 and 2025 with an average annual salary of $75,000. Phase 1 and Phase 2 were completed in January of 2017, and it's going to be comprised of 4.7 million square feet consisting of 16 buildings. It's a pretty impressive campus that they're putting in over there. It's Cerner, like I said, pretty much biggest, I guess, economic impact in Kansas City to talk about right now.
Mm-hmm. Oh, and hey, I forgot to mention at the outset, if those of you listening live have any questions for our presenter, and you've got your little GoToWebinar control panel, just go ahead and type in a question and hit send, and we will get to as many questions as we can, either during the presentation or at the end.
So conclusion, while manufacturing jobs from the Midwest pretty much reign supreme, while manufacturing jobs remain steady in KC, that's top 5 in the US, private businesses, technology companies, and healthcare services are growing. Capital improvements are underway without assistance from federal dollars, which is important, providing jobs and improvements that residents want. New home sales are increasing, but not quickly enough to satisfy demand. I think we're seeing that kind of all over the country right now. New residents moving into the metro area are increasingly likely to rent a home due to the low inventory of existing homes on the market. So very, very good for rental demand. And the influx of renters has decreased the vacancy rate in the Kansas City metro to 8.9%. The number of renters has increased by more than 3.7% since the recession in KC.
All right.
So property management stats. Now these stats are based on the 4 major metros that we're actually managing properties in right now. I used to outsource my management, but due to the fact that I was just trying to provide a better service to my clients, I believe that the way that I can do that is just by encompassing everything that's involved with the turnkey process, and management being the most important. So we brought our management in-house in 2016. And in just 2 years, we already have over 500 properties under management. The average duration of leases is 24 months. We really push for 2-year leases. There's different views on that, but honestly, in my opinion, in my experience, I prefer the 2-year lease to start off if we can get that tenant to commit to 2 years. And we always try and add a increase in year 2, so the rent's not staying the same over that 2-year period. We're always asking for extra money in year 2 of that lease, and we've been pretty successful with it. 92% of our tenants are re-signing, and they did that, and that was in 2016. And that's been pretty consistent year over year. And the average rental price for our entire portfolio, because we have properties in Texas as well, and as I explained, we also do A-class properties, our average rental price is $1,800. So we're really targeting, nicer neighborhoods, areas that command higher rents, and also tenants that make a little bit more income, because in my experience, like I said, I've just found that really the passive model is heavily relied on the type of tenant that you're able to place in the property, and a lot of that has to go to the area that you're producing these homes in. So I really try and target some true middle class neighborhoods where I just get those higher earning tenants, so we can really mitigate the common risks that are involved with owning these properties, like evictions, extended vacancies, high cost maintenance, so on and so forth. Okay, property management fees. We do charge a first month, 100% of first month's rent. That goes to leasing the property. We put our properties on the MLS. We use everything we can all the resources we can to get our properties leased so we can lease them quickly and as quickly as possible. And so that's why we offer up to 100% of first month's rent. So if we do have an outside agent that leases the property off the MLS, half of the rent can go to them as compensation. The renewal fee is 25% of 1 month's rent. Like I said in the earlier slide, we're pushing for 2-year leases, so you shouldn't have to expect a renewal at least in the first 2 years of ownership. New tenant leasing fee, once again, is going to be 100% of 1 month's rent. Monthly management fees is 10%. Is the maintenance in-house? Yes. Markup on repairs? None. We're very investor friendly. That's another reason why I brought the management in-house. I can control the fee structure. I can make sure that our fees are investor friendly. I basically modeled my management company off of what I would expect as an investor because I'm an investor myself. Pets allowed? Yes, we do allow pets. I have found that if I don't allow pets, especially down here in Texas, I feel like everybody has a dog. I'm really losing out on good potential tenants. We do allow pets, but we do ask for a $300 non-refundable pet deposit. And we also require that they carry renter's insurance. But that $300 deposit is per pet and it is non-refundable. And there is no pet rent. I don't charge pet rent. So here we go. Here's the stuff that most people really care about. Here's some examples of some properties that we have recently sold. This home here in Kansas City, a 3-bed, 1.5 bath. Pretty nice size home, just over 1,800 square feet. The purchase price was $127,000. We based our numbers, obviously here we have all cash and on a 80% loan to value model at 5.25. The down payment, just over $25,000. Closing costs about well, we have, it looks like 1% of that. That should be a little bit higher, I feel like. But initial cash invested, almost $28,000. Principal and interest payment, $561. Taxes, as you can see, very low, only $96 per month on the taxes. No HOAs. Insurance also pretty affordable. And the property management, it should be at 10%. I don't know why that's at 8, but either way, monthly rental income, you're at about $1,000 or $1,100 with this property commanded, and your monthly cash flow is in that $250 range. I would say that's pretty common for what you're going to see for our Kansas City properties.
I'm just going to put you on the spot here and ask this, but isn't it normally 10, but for Real Wealth Network you're doing 8, or am I in error there?
That was something that we discussed with Scotty and Kyle, who run the management company. They said if somebody already owns property in Kansas City, we would keep them grandfathered in at 8%, but for new clients, we have to keep it at 10, Ben.
Got it. Okay, fair enough. I think that's probably
I'm sorry, everybody that's watching, the numbers are a little bit off. But like I said, expect, the monthly cash flow on average to be anywhere from maybe on the low end around the $200 mark up to like $250. That's pretty much what we've been looking at. But I'm sorry about the inconvenience.
It's a $13 difference. I think we can probably deal with that one. And in terms of the 1%, I think typically with the all cash, we'll calculate it at 1%. But as you can see on the finance one, it's
I got you. Yeah. It was about 2%, right?
Yep, 2.5, something like that.
Perfect. Yeah, so that makes sense. But yeah, on the property management fee, if anybody who's watching, if you do have properties in Kansas City, if you are, we by bringing you onto our management, we'll grandfather that in. But yes, moving forward, anything new, it is 10% on the management fee.
Mm-hmm. Gotcha.
Here's another property that we just recently sold. This one, I would consider this is like starting to get into A territory. Your purchase price is $132,500. Down payment, you see there, closing costs, like we said, to about 2.5%. Your cash flow on this property would be in that $200 to $250 mark per month. So that, in my experience, has been pretty attractive to my investors who are looking for good, quote unquote, cash flow markets, and kind of Kansas City hits those numbers. But really solid property here. And yeah, the only adjustment that I would make for all of you watching, it would be, 10% on the management.
Yep.
And here's another one. This property here is what I would consider probably a B-, C+ to a B-. This would be what we would produce on the low end in Kansas City, and the purchase price here was $108,000. And you see your monthly cash flow on this property based on the 8% management is almost $300 per month. You know, like Ben said, not too much of a difference with that extra 2%. So you're seeing some really, really solid cash flow on these properties. So I wanted to give you a good wide range. The first two properties that I showed you, I would consider, you know, high B's to borderline A- properties for the Kansas City market. And this would be a good example of kind of the bare minimum threshold that I would purchase, right? Like a C+ to a B-. I wouldn't go far below this in the Kansas City market. In my opinion, your risk just starts to increase too much, and I'm not able to provide my clients and Real Wealth Network members that truly passive experience that you're looking for.
Mm-hmm. How old typically are your properties? I mean, what is the range of build dates for most of your properties?
Yeah, that's a good question. I mean, most of this stuff, you know, you see in most Midwest markets, you're in the 1950s, 1960s. I don't really delve too far below that. It would be a very rare occurrence if I went to something below a 1950s build. Mm-hmm. But on average, that's pretty much what you're going to look at. 50s, 60s, 70s builds.
Got it. Okay.
Good question. And just to talk a little bit more about our team, very, very proud of our team. Obviously, we can't, you know, provide our clients with the experience that they get from working with our group without the people that work for us and our executive team in our Dallas headquarters. We are headquartered in Dallas, used to be headquartered in Kansas City, have offices in all of our cities that we operate in. But we have a total of 25 members in our Dallas headquarters and a team of over 50 members nationwide. And that's going to include, you know, the people that you're going to talk with, transaction managers, people who are helping you close deals, our acquisition management team, our construction management team in each market, and our executives here. So over 50 team members nationwide in four major markets. Mm-hmm. And so a quick overview of our process again. You know, when you are handed off to us from either Ben or Joe or Aristotle, anybody that you're working with over at Real Wealth Network, the initial call is going to be a consultation call. We're going to talk about your goals, what you're looking for, how we can help you. Then we're going to start presenting properties that are available and do a property assessment, and then creating a success plan. If we're not both on the same page, we can't help you reach your goals. So we're very much involved with, you know, we're not just acting as real estate agents that are just trying to sell you properties. We truly want to build a plan for you and develop a strategy. And then the approval process there, that would be going through one of our lenders, one of our preferred lenders to get pre-approved. But I mean, you guys, Ben, you do a great job of bringing people over who are ready to take action. So normally the approval process is already taken care of at that point. And then we're going to actually go through the property identification process. We're actually going to select a property or properties to move forward with. And then we're going to set up all the necessities. We handle all that for you, property insurance, all the stuff that's needed to get the property closed. Then we go to the closing table. And then at the end, after we close on the property, we stay in contact with you. We have something that we like to call investor concierge service here at our office, which is basically, you know, we're staying in contact with you month over month, just to make sure that things are running right and everything's good. And we like feedback from our clients on how we can get better. You know, I believe with any business, there's always ways that you can get better. So I think constant contact with our clients, especially when you're buying properties outside of your own backyard, you want that, you know, extra special care. So we try and pride ourselves on that.
Nice.
And now we go to the questions or comments.
All right. Well, nicely done. We do have a fair amount of questions here. And if you don't know, just be brutally honest and say, I have no idea. It's totally fine to not know. But here's a question. What is the median income for the area?
So in one of the previous slides that we had, the median income for Kansas City is about, it's just slightly over the national average. It's over $60,000. In the areas that we're investing in, you're looking at more so the entry level middle class. So I would say the majority of our areas, it's between that. I would say 55K is probably the best the best amount to put it at, but anywhere from 50,000 on the low end is the median household income on the properties that we're producing, as high as up to that 63,000, where we said on the slide where that's the median income for the Kansas City area.
Got it. Okay. And we've got two questions on this. I think I know the answer, but I'll go ahead and ask anyway. You highlighted single-family homes. Do you happen to know, like that blue house on the hill and the one that you showed before, do you happen to know what cities those were in by chance?
I believe the blue house was in Raytown, which Raytown is what I would consider, your C class to maybe low B class area. So yeah, when you're in that 100K price point, those are going to be the majority of the areas that you're in. When you start to get to some parts of Grandview, Independence, that's where you kind of get in that maybe higher B to even sometimes A class realm. But I believe that blue house that was in Raytown.
Got it. Okay. And then here's the one that we had two questions on. Do you mainly focus on single family homes, but do you occasionally see duplexes or triplexes or any quads, or are they just not really that prevalent in that market? Or as in some markets, they're there, but they're in kind of lousy areas?
That exactly. You hit the nail on the head. No, there are a lot of duplex, quadplex opportunities in Kansas City, just like, all of the Midwest areas. I mean, Detroit, where I'm from, lots of opportunities like that, just not in the neighborhoods that I feel comfortable managing in and producing assets for my investors. Because like I said, it's a careful balance, Ben. You and I have had conversations like this plenty of times. I want to provide good numbers, and in today's market, it's become tougher and tougher, right? Because it's like, I feel like we're back to like pre-recession, the last recession pricing, but I'm not going to put my investors in neighborhoods that are unsafe or are not going to be able to provide a passive experience just because the numbers look good on paper. Right. And that is what, most of the duplex and multifamily opportunities in the Kansas City market are going to get you.
Right. Absolutely. I mean, I was listening to a podcast that Kathy Fecky did earlier, and she was just talking about how, unfortunately, the real estate investment business is, there's full of sharks. There's a lot of honest people, but there's a lot of sharks. And one of the most common things is, look how great this $38,000 property looks on paper.
Right.
D minus class, but the numbers are just absolutely out of this world. 18 to 19% cash on cash return, But what the numbers don't tell you is the lousy caliber of tenant you're going to get,
right,
the horrible crime in the neighborhood, the high rate of turnover, and the minute the property's vacant, you're going to have to worry about, copper thieves coming in and stripping your place. So the numbers, the pro formas don't show the downside to the numbers. So
that's exactly right. And I'm so glad that Kathy discussed that. And I talked about that a lot on my podcast as well, because I was one of those investors that kind of, I guess, for lack of a better word, I got burned investing in those type of properties early on in my investment career. And it happened in some areas of Detroit that I shouldn't have been investing in. There's great areas of Detroit, though, and I know that you guys work with a great provider in Detroit as well, who I know personally, and I still own rentals in Detroit. I just own them in good neighborhoods, and they work out great. Just you have to be very careful about the neighborhood that you invest in, because a lot of times those risky, bad neighborhoods look great on paper, but it just those results never come to fruition.
Right, absolutely, very, very rarely, and almost never. All right. Does your property management, do they do property inspections on site? And is it automatic, or is it something that the investor has to request?
No, they do that automatically. That's another great question. So our properties usually go through, well, not usually, they do. They go through 3 different inspections. They're going to go through a quality control inspection by our construction manager in each market. Then they're going to go through a third-party inspection that our investors, they're going to receive that report, and then property management also inspects the property before we move a tenant in there. Now, every time the property is turned, it goes through a property management inspection. You're going to get photos, video documentation, all that sort of stuff, and a scope of work for any light repairs that might need to be done that are outside of, normal tenant wear and tear, right? Right. That will be charged back to the security deposit, but we give you a very detailed report every time a tenant moves out. What's normal wear and tear, what's not. Here's photo documentation, here's video walkthrough, and we inspect it every time the property changes hands. Now, also, our maintenance team is instructed, anytime there's a maintenance request, that's your opportunity to get into the property and see how the tenant's taking care of the home. If the tenant's taking care of the outside of the property, we do routine drive-bys and things like that when we're in the neighborhoods, because most of our properties are concentrated in the same areas, right? Mm-hmm. And so if the lawn is taken care of, things are looking good, we're going to leave the tenant alone. It's not really, I'm not trying to bug them all the time with routine inspections and things like that. But if they do make a maintenance request, our maintenance guys are instructed, hey, make sure that they're taking care of the property. If you walk in there and it's a disaster, let us know and we're going to schedule a pop-up inspection, right? And get in and take care of that. So we're very, very much involved with how the tenant is taking care of your property, the condition of your property throughout the time that you own it. And that goes back to why I think it's so valuable to have the in-house property management solution with the provider that you're working with.
Right, absolutely. And a lot of times people are concerned about, okay, it's great when you do it during the turn, but what if I have a tenant that's been there 3 years and I'm happy, they pay on time, but I haven't seen the inside of my property for 3 years. I get a little nervous about it. Then at that point, it's good to hear that you tell hey, if they have a problem with their garbage disposal, Mr. Plumber, could you just keep your eyes open and gee, if they've got 3 pit bulls running around or 18 relatives living in the house or they're slobs, we kind of need to know about it so we can address it.
Well, and Ben, I will tell you, even if, let's say we're doing routine drive-bys, the lawn's being taken care of, usually you can tell if the outside is nice, generally the person's taking care of the inside too. When the outside starts going downhill, that's causing a raise for, you should be concerned. Right. And then at that point, we want to get in and see what's going on because, it's one thing. Sure, you're collecting rent checks. I've even owned properties where, hey, the tenant never missed a payment. They were on time every time. But when they went to move out, I had a lot of damage, Right. And so it's very, very important we keep our eye out for those little indicators. If you're not taking care of the outside, there's a good chance you're not taking care of the inside. And there's generally going to be maintenance calls that come up once a year or so, or whatever it may be. The maintenance team is definitely trained to, if you're seeing something in that house that doesn't look good to you, report it back to us so we can do a pop-up inspection.
Right. Understood. Okay. Let's see here. Got a couple more questions. And we were actually running a little bit ahead of schedule, which is really kind of refreshing. How landlord friendly? If you would say California and Illinois is a 10 of landlord unfriendliness, and Oklahoma is a 1, where would Missouri rate?
3 probably. I mean, it's been probably the most landlord friendly city that I've worked in, to be honest. I know exactly what this person that brought the question is talking about. Yeah, California is a nightmare. There's also some cities in the Midwest that can be, a nightmare as well, where the city wants to constantly get involved with things, and it just makes it very difficult to evict people when they're not paying rent. Kansas City has actually been a very, very easy city to navigate in. Right.
Okay. What about tenant turnover? Well, no, let me rephrase the question. Typically, you've got a brand new house. How long does it take to fill the tenancy? Obviously, that's a range, but is it fairly quick? Have you found there to be a fairly decent rental demand, or does it languish for 6 weeks?
No, Kansas City's been growing pretty decent. On average, about 20,000 new residents each year. It's not what I'm experiencing in Dallas, but it's pretty decent growth. Rental demand is there. The property needs to be priced right. I think anybody who's a landlord right now, if you're asking too much for rent, there's a chance that the property could sit vacant for a long period of time. If you're priced exactly right, you're going to get that property leased quickly. And then also Kansas City is one of those cities, it's weather dependent. I'm not going to lie. I own property there myself. I own property in Michigan. As I said, I own property in Texas. Whereas I don't really run into many weather issues in Texas, right? Because the climate's pretty solid all year round. In Kansas City, Detroit, those areas, it gets cold in the winter and not as many people are moving. So you might see a little bit of a lag, but I wouldn't say anything outside of 30 days.
Right. Okay. Gotcha. And I'm getting a lot of questions about, what's this guy's name? What's the company name? So let me just kind of address that. We're not trying to be mysterious here by being somewhat anonymous, but our system at Real Wealth Network is that anybody, we can't control who listens to these webinars. Anybody can listen to them. And what we do is we go around the country and we select affiliates such as Kansas City and the person you're listening to, and we don't want to barrage them with hundreds of investors calling that maybe aren't ready or can't qualify for a loan. So we have a little bit of a control mechanism set up. So if you are interested in speaking with Kansas City and getting some of their properties and getting into a business relationship with them and starting to be one of their clients, then what you need to do is schedule a strategy session with one of us. There's me, there's Joe, there's Aristotle, and you may have already had a strategy session. And for those who don't know, that can be a 15-minute conversation or it can be a 40-minute conversation whereby we kind of find out what your goals are, what you'd like to do in property, what's your experience been, and we help you narrow it down to markets that are appropriate. But at the same time, we're also kind of qualifying you in a way. We want to make sure, it's great if you're scheduling a strategy session and you're a starving college student with, $1,000 to your name. That's great, but we don't want to give you our affiliates' contact information because you're not ready to do that. And if we did that, everyone would be on the phone all the time. We want them focusing on being out there finding properties for people. So if you are interested in speaking to Kansas City, just reach out to your IC, investment counselor, schedule a strategy session, or if you've already had one, just email them. Hey, Joe, we did a strategy session 6 months ago. Please send me the information of the Kansas City affiliate we just heard from. So that's the reason we do that. It's not that we're being mysterious.
Yeah. And Ben, honestly, just to piggyback off that, like I have a number of investment coordinators is what I call them here at my office, but I only let one deal with Real Wealth Network members. And she's my most senior investment coordinator. And so that's the reason why I do that. And as being the most senior investment coordinator and building her own client base, she is booked regularly. She's great. She's my all-star. She's very attentive. It's not about making a sale to her. It's about finding exactly what your goals and wants are, like you just said. And like, if you're really being attentive to the client, then, those conversations can go at least for a half an hour. And so, like you said, Ben, thank you for bringing that up. We really want people who are ready to take action, have decided that, yes, Kansas City is the market I want to work with. You have a qualifying session with one your IC over at Real Wealth Network, and then you can get over to Sarah.
Got it. Okay, let's answer the question here. All right, let's see. I noticed, and I'm going on the little tiny sample size of the 2 or 3 properties that you show, but it seemed like 3 bedrooms, 2 baths, maybe 1 bath if it's an old enough home, and around 1,300 square feet. Is that kind of what you're targeting, or do you go smaller or bigger than that?
That's pretty much what we're targeting. You'll see in Kansas City, 3-bed, 1 bath is pretty common in that price point. In that below 150 price point, you might see the 3-bed, 1.5 bath. When you start to get into 3-bed, 2 baths, the property, if it's in a good neighborhood, it's going to be, a little bit higher price. And then with Kansas City too, it's not uncommon to have 1-car garages or no garage in that price point. Don't be deterred by that. That's just common for that area. It's kind of a hilly area, so you see a lot of properties that are kind of built on hills, and you'll see a lot of 1-car garages. It's just kind of common, or a carport. And so but that's pretty much what we're looking for. Very rarely am I going to go for like a 2-bed opportunity, although in my experience they've leased out just as well as 3 bedrooms. We really like to stay at that at least 3-bed, 1 bath, 1-car garage at least is our kind of bread and butter.
It eliminates a whole subset of potential tenants if you've only got 2 bedrooms.
Yes, exactly.
Everyone wants to have a bedroom and an office, and where's little Jimmy going to sleep?
Exactly.
Yep. All right. This is one of the earlier questions, and I keep forgetting to ask it, but in the Power and Light District and some of the kind of trendier downtown areas, are you seeing like a trend of your millennials moving into the downtown area, into apartments, as opposed to single-family homes? I mean, is that occurring?
That's a good question. I would say that, millennials, apartments are always going to be pretty popular to millennials. I live in Dallas, and, this is a big millennial city, right? Yeah. Because of all the job growth going here. So high-rise apartments and things like that. I read a stat that Dallas was second only behind New York City for the most apartments being built in 2017. But millennials, you got to keep in mind, they're a very, very large population for the, I believe they're the largest, right? Did they not take over baby boomers? That's what I've been reading. So, although yes, millennials do like the luxury apartments, they do like to be downtown, they do like that sort of stuff. You also have that millennial class that wants single family homes. So I just feel like it's such a large sample size that I wouldn't be too worried about losing potential tenants to, you know, downtown apartments.
It's not like the population at whole shunning single family homes because downtown's become so hip, everyone wants to live there.
The hip people that like to be, you know, close to work, walking distance to work if they work downtown, or, you know, they're single and they want to go enjoy the Power and Light district, it's a walk away. Yeah, you know, they're not looking for single family homes, but the people that maybe have a child or, you know, don't like that hustle and bustle, yeah, they're just like us. They're looking for single family homes in the suburbs.
Right. Okay. Section 8, do you take Section 8 tenants in Kansas City, or if so, what percentage?
No, I don't. I just have had too many bad experiences. I don't like dealing with it.
Okay. And I've got two questions relating to this. Always comes up in virtually every webinar, but is Kansas City, it's all about natural disasters. You know, whenever we do a Florida or a Houston one, there's a lot of hurricane questions.
Yeah.
So here's a tornado question. Is Kansas City in Tornado Alley? And do you experience natural disasters, and what kind and how often? So you have to put on your meteorologist hat to answer this one.
You know what, Kansas City, it's in the Midwest, that area. It is technically in Tornado Alley. I really cannot speak to how often that happens, and I doubt it's nearby the city. Like, okay, so my firsthand experience, I lived there in 2014. My knowledge has only been investing in Kansas City from basically, which I started investing there before I even moved there. Let's call it 2013. So my 5-year experience, I have not heard of any natural disaster, any tornado getting close. But the only natural disaster that I think would qualify for that area is a tornado.
Yeah.
And I don't think that you're really experiencing any tornadoes that are going to cause a lot of devastation nearby the city. Now there's some other more flatland areas around there where you could potentially see that, but I wouldn't be too worried about it.
Yeah, exactly. I mean, it's just like anything else. Oh, by the way, Matt emailed, and I'm just going to thank you publicly. Millennials are on the cusp of surpassing baby boomers as the nation's largest adult generation, according to population projections from the U.S. Census. So you were right in your guess there.
They're coming. I don't know. Am I considered a millennial at you know? I mean, I'm gonna throw my age out there. I just turned 32 on Tuesday. So
I don't know.
We're taking over.
Yeah, you might be Generation Y. I don't know.
I might be.
Oh yeah, Matt does know. Yes, up to age 35.
Oh, perfect. Yes, I'm a millennial. So yeah, we're coming. And I'll tell you, I live in the suburbs out here. I have a young daughter. She just turned 1 year old. I don't want to live in the city, you know, and even though there's a lot of great things going on in downtown Dallas, I prefer to be in the suburbs.
Right, I hear you. Well, I'm definitely not a millennial. I'm not going to state my age, but I'm older than you. Okay, anyway, so let's see if there's any other questions here. Yeah, you know, if anyone asked me, I would say that it's a cash flow market, not an appreciation market. Whereas Dallas is clearly an appreciation market. Would you agree with that, or what's your 2 cents?
I agree, because you know what, we're in a situation right now where, Ben, if you're buying property in good neighborhoods across the U.S., all of these U.S. markets are appreciating. Okay. Well, the reason why I identify Dallas as an appreciation market, because I feel like even in a down economic time, Dallas should still hold value or continue to appreciate because of the diverse economy it has. Right. Kansas City, although it's been appreciating, and like I said, at over 8%, you know, do I see that lasting? I don't know. No, I don't compare Kansas City to a market like Dallas. I believe I put Kansas City in that cash flow range, because I feel like, you know, the trends of property values could fluctuate. It could go up, it could go down. Whereas Dallas, I think I label that an appreciation market, because I don't really see it going down. I see it maybe holding value and continuing to go up.
Right. Yeah, there's just too many other positive factors with that particular economy.
Yeah.
Okay, well, let's see. Let me see if there's a slide after this, and if there isn't, then just keep it here. Okay, there it is. Okay, perfect. Well, first of all, I'll stick around for a second, but thank you so much. That was a great webinar, very informative. I appreciate it.
Thanks.
And you're going to be out on our West Coast events, and apologies in advance to those of you who may be listening from Australia or Boston or somewhere not anywhere close to the West Coast of California, but our next live event, we're going to have Chicago, we're going to have you out for Kansas City and St. Louis. In fact, you're kind of doing both of those, aren't you? You're going to talk about St. Louis as well? All right, so that'll be interesting. So you're going to be, you will be talking about Kansas, St. Louis, and then we're going to have to talk about Chicago. It's going to be on the September 22nd in San Mateo. That would be a Saturday, Sunday the 23rd in Los Angeles, and Monday the 24th in San Diego. So if you're interested in getting more in detail and seeing people in person, and then it also gives you a nice opportunity to meet other Real Wealth Network members, many of whom have invested in these markets or other markets. So there's kind of the synergy where you can talk to other people and you know, perhaps meet Kathy and everybody. It's really good thing to do.
All right. And here, actually, just to piggyback on that,
Yes.
the St. Louis, we're going to be doing a St. Louis webinar just right before, I think the 20th. So right before that weekend that I'll be out there in California, which I can't wait to get out there. I love going to California. But yeah, so really looking forward to that. And yeah, I would say, you know, every event I've been to with Real Wealth Network, I've been to one with you guys in Orlando. We just did one in Detroit, my hometown. Love meeting the Real Wealth Network members, really cool people, and looking forward to seeing everybody there that weekend.
Okay. So if you're interested in learning more about Kansas City, contact your IC, investment counselor today, just like I kind of talked about earlier. That actually goes with any market. If you're interested, you need to talk to us first. If you've already had a session with us, that's great. It just streamlines it. You can just email your IC and say, hey, I'd really like to know more about Kansas City. Please send me the contact information. We can do that. Also, we archive these webinars. After we're done, we have recorded it. It takes about 24 hours, but we will post it onto the site. So if you want to play it again and again and again or whatever, you just go to log into Real Wealth Network, go up to the top where it says invest, go to the Kansas City page, so invest, and the drop down appears with all the different markets. Select the Kansas City page. It'll take you to the Kansas City page. Then you scroll down, and there's the webinar with a big play button on it. And you can just play it from there. Now, it's not going to be probably posted until about this time tomorrow. It takes a little bit of time, but we will post it as all webinars. In fact, I think it's listening to these archived webinars is probably the best way to get familiar with an affiliate in a particular market. So anyway, there we have it. So I think we're done. That is a wrap. We're a little bit ahead of time, a little bit ahead of schedule. Thank you so much. Good job on Kansas City. And we do this every Thursday at noon Pacific, 3 p.m. Eastern. So we will see you, or we'll see all of you listening next week, and we will see you on the 22nd, 23rd, and 24th in the West Coast of California. Thank you so much.
Yeah, thanks, Ben. Thank you for everybody who attended the webinar today. Thanks.
All righty. Talk to you later, everybody. See you next week. Bye-bye.